Good afternoon, everybody. So, for the fiscal year ending 2nd February of 2025, we would like to start the earnings call for the second quarter. And as always, I will be first of all giving you the overview of the financial results, and then I will hand over to Kawano to present on the business strategies and the topics. And now, in terms of the summary of the financial and also the progress of the business, and I would like to cover the summary of the topics. And for the second quarter, the meeting spaces, rental spaces, and food and drinks, these are trending quite strongly. And on a cumulative basis for the second quarter, the sales grew by 11.3%. So we were able to exceed the level of before COVID. And so we had been able to enjoy a very solid result for the 3 months. And in terms of the expenditures, especially around the labor cost, there is increase in SG&A. But despite that, looking at the operating margin for the second quarter on a standalone basis, it was better than the same time last year. And in terms of the business topics, the openings in the first half was relatively slow. This was mainly in the leisure and lodging business, but we will be accelerating the openings, mainly in the rental space in the second half. And so we will continue expansion of the business. And the hotels, as I mentioned earlier, have been solid in the first half, and we will continue the openings in the second half as well. And also, we are investing in the space market. But apart from that, for Liricata as well as Novalese, we have the subsidiary under equity method, and also the subsidiary consolidated subsidiaries. The investment will continue. Liricata will be consolidated as of August for the balance sheet, and that is the consolidation that we're doing. And I would now like to move on into the overview of the financials. And starting from the numbers on the consolidated financials, as you see here, the chart that it is highlighted in red is the numbers for the YTD basis as well as for the quarter. And 20.2 billion is sales, and OP was 2.27. And after ordinary profit is 2.6, and the net profit is 2.4 billion. And in terms of sales, as I mentioned earlier, mainly around food and rental spaces, and also leisure and lodging, and both are very solid. And so it's 14.3% growth on a consolidated basis. Sales before COVID, excluding Regis, when you compare Apple to Apple, it was 20.1 billion yen, and so we were able to exceed the pre-COVID level sales. So continuing from Q1, we have been able to end at a very solid level. And in terms of cost of goods, the opening of the rental space was quite slow. This is just a matter of timing, and because of that, that was pushed forward into the second half. And so the utilization of the spaces that was opened in the first half has increased, so therefore the cost ratio has improved. And as a result of that, for last year and this year, it's within the assumption. And so the gross margin that we are targeting, which is around 40%, is being achieved. And in terms of SG&A, at the same time, compared to the same time last year, it is increasing quite significantly. But as we mentioned at the Q1 earnings call, labor cost, starting from the first quarter of last year, we started to hire, and we went into full scale in increasing the headcount. And compared in August, we have around 200 increase in headcount. And so we are expecting the demand of rental space and leisure and lodging to continue. And in order to support that, we're increasing headcount, and that is why the labor cost is increasing. However, the increase is starting to settle down, and so the SG&A growth will not be as steep as what we saw before. But the labor cost is still lower than pre-COVID, but we are establishing a structure that has a more efficient usage of headcount. And another reason for increasing SG&A is that the sales for leisure and lodging is increasing of the mix, and the OTA related sales are increasing compared to before, and also system renewals. Because of the system renewals, there's an increase of the one-time cost of about 60 million yen, and that is starting to settle down. And so I don't think it will come out, but in the recent terms, it is higher than the previous year. And because of those reasons, the total SG&A has increased. And as a result of that, OP was 2.73 in OP was the result. And that was what we achieved, as you saw. And in terms of the ordinary profit, compared to the second quarter of last year, it has gone down quite significantly, and that is because Ririkara was acquired, and because of that acquisition, there was some negative goodwill at the time of the acquisition. And PPA, the accounting process has been finalized for the previous year, and the negative goodwill period was finalized this second quarter, but we did a retroactive booking of that, and that was 345 million yen worth of a negative goodwill. And so compared to the second quarter announcement, that has gone up for the second quarter of last year. And so superficially, it looks like the profit went down, but in reality, it's about the same. And so now we're seeing some abnormal increase in the profit last year. And last year, there was some tax impact from selling of Regis, and because of that, the last year comp was quite large, and because of that, it looks like the profit went down, but last year number was abnormal, and so it's not as if we had some unusual situation to lower the ordinary profit this year. These are both all within the assumption. That is all related to the numbers, and when we look at the quarterly trend of the consolidated sales, this is what it would look like. And this is adjusted consolidated sales by service, and this is excluding Regis, and we are comparing so that we can see the apple-to-apple comparison trend. And on the right-hand side, you see the Q2 result, and compared to Q1 to Q2, where there's always the busy season and the shoulder season, so therefore it's gone down. But compared to the second quarter of last year, for rental space and also leisure and lodging are both increasing. So we are seeing a very healthy growth of the sales. And as you can probably see that from this chart. And especially for leisure and lodging, we are seeing a very healthy growth, and we have a record high in sales in the most recent quarter. And next is the balance sheet, consolidated balance sheet. And as you see here, as I mentioned at the beginning, Ririkara had been consolidated into the balance sheet, and because of that, we see a big increase, and it might be a little bit difficult to read, but Ririkara has a very healthy balance sheet, so just because they were consolidated, it's not going to give any impact. And the capital adequacy ratio continues to be around 40%, and we have been spending a lot of cash. I mean, we've been making strategic investment for hotel openings and other openings, and for other Ririkara Space Market and Nobarise, we have been continuing with the investment.
So the investment cash flow is negative 10.6 billion. Free cash flow is negative 7 billion. So we are making upfront investment. That was what we saw in the first half. But as a result, we still have 25.6 billion yen of cash. So in terms of balance sheet, it's very solid. So we got the robust cash flow, and from September, it will be reflected in September. And we will be achieving those results from Q3. So that's what you can see from my balance sheet and also the cash flow trend. And looking at the business in more details for Q2, first and foremost, for all of the new location opening, both for the leisure lodging and rental space, for February 25, this first half, we had 9 new facilities and we closed 9 facilities. And the big space will be accounted for by the hotels. On the right-hand side, you can see the new openings and also floor space expansion. On the right-hand side, we have 3 hotels at the bottom, and this accounts for most of the new space openings. So in the first half, we were opening mostly hotels in new locations. And from second half onward, as Akano-san will mention later, we will be increasing the new location openings for the rental spaces. At this point, we have over 3,000 tsubo that's in the plan to be expanded. So with this new openings and the closings, you can see this by grade in this table. And as a result, we have 267 facilities across Japan and a high of over 160,000 tsubo of contracted space. And on the top, you can see Cirque. The Novalese facilities, because they are now equity affiliate, their facilities are added. So compared to before, we have additional 36, and this is because Novalese's facilities are included in this item. And looking at the KPI, sales per tsubo, in Q2, it was 34,194 yen on the far right. That was a result for Q2. Earlier, I mentioned when I talked about the revenue, Q2 is summer season, which is a slow quarter. So normally we see some dip, but after the pandemic, we have been on a recovery trend, and the sales per tsubo has been rising. So compared to before COVID, we are now at a comparable level. And last but not least, for the rental space and the flexible space, this is the mix by purpose. Far right is the Q2 of February 25. And as you can see, compared to before pandemic, we see a steady growth for the training purposes. And one more thing to note is that from Q3 last fiscal year, the others on top has been increasing. And with the new system, we are able to foresee and calculate more accurately. So we are now able to analyze the data. And as we accumulate this database going forward, we will be able to make more effective proposals to our clients. So we will continue to accumulate this database so that we can improve the mix and increase the proportion of the rental space portion, which is more profitable and high occupancy rate. So that's the update to the Q2 numbers. From now, we'd like to invite Mr. Kawano to talk about the strategy to date and also strategy going forward. Yes, so I will now take over to update you on our business strategy. So first is the new facility openings. Q3 onward, we are planning to open 3,179 tsubo. On September 1st, we will open a TKP Garden City Obihiro. October 1st, TKP Hakataguchi Conference Center. And also the same date, TKP Kyoto Shijo Conference Center. And also October 1st, we had TKP Tamachi Ekimai Conference Center. Those were opened. And on November 1st, we are opening TKP Sendai Aobadori Conference Center. November 16th, So we announced today, TKP Shimbashi Shiodome Conference Center will be opened. And on December 1st, TKP Garden City Premium Kyobashi Annex will be opened. And on January 1st, TKP Garden City Premium Hamamatsucho WTC Annex will be opened. So we have a series of new openings. And we have a collaboration with Fabit on October 1st. We are using the second story of Fabit Hakata as TKP Hakata Gucci Conference Center. And that was opened on October 1st. And Fabit today has 20 facilities with 20,000 members. And we just announced this news right in front of Shimbashi Station. It's a Shimbashi Shodome area. And this is the former Shiseido head office building, and the whole building in total has 1,215 tsubo, and they will be opening soon. And also from the time rental, we will also be offering a more medium to longer term meeting room service. It was also in the weekend Nikkei newspaper. So the time rental will be shifted to a more or shorter or mid-term rental services for local rooms or with some rest space. Also, this will be a rental space that can be leased for usage with more than 5 people. And with Fabit, regarding the segmentation of the market, they will be targeting the space which will be suitable for usage of 5 people or less. So smaller rooms will be with the Fabit logo, and for bigger rooms with more than 5 people, it will be short-term, mid-term, and also rental by time using the TKP brand. And for the leisure and hotel, lodging business and training in Q2, 3 upper hotels were opened. The TKP's operated upper hotel is 15 hotels with 2,894 rooms. And August 1st, Obihiro Ekimae Upper Hotel was opened. July 23rd, Kyoto Upper Hotel was opened. August 1st, Upper Hotel Hakodate was opened. And on November 20th, Upper Hotel Wakayama will be opened. The Obihiro and Hakodate and Wakayama, those hotels, we acquired the Upper Hotel from Upper Hotel. Also from day one, we have revenue and also users. And we are going into the designated cities with Upper Hotel. We are also accelerating the openings of Upper Hotel in the tourist destinations and also mid-tier cities. We would like to expand those offering to stimulate the regional revitalization to have a hotel that's very close to the local market and community. And this is the resort hotel opening strategy on page 20. So we have Rekutore Yugawara, which is now going under full renovation. So not just for the corporates, this will be available for individual customers. So it will be rebranded to Grand Rekutore Yugawara. And right now, this year, we are opening 10 new lodgings. We achieved that target. Also, we would like to open 10 more new lodging spaces.
And moving on to the strategic investments and business alliances. Well, right now, this is just a list of the a portfolio of the investments that we're making now. And as you see here, the new ones would be Apamang. and this was an MBO, and we are working on forming a business alliance with Alphamon as well as with Fabit. And the new one will be Space Market, and we have invested 21.22% in Space Market. And especially with regards to Space Market, right now, on October 11th, we have signed a contract. And the convenience station can't stay, which is a unmanned meeting room, and that will be posted on Space Market. And we have started to work on that. And from November 1st, the posting will start. And Space Market covers things like temples or baseball spaces or old housing that can be used for training purposes. And starting from today, from the TKP webpage, the unique venue sales have started. Moving on to the progress of the second quarter. With regards to the rental space and flexible spaces, towards the second half, especially in the third quarter, we are seeing good growth of banquets. In the fourth quarter, we have received many orders, so the second half is expected to be better. And for hotels, leisure and lodging, the demand is very strong. And Appa Hotel, the new opened Appa Hotel has marked a very good start too. And in terms of the strategic investment and business alliance for Lirikara, we have sent 2 directors, and we are enhancing the collaboration right now. And for Space Market, as I mentioned earlier, specific alliance have started to be considered, and quite soon we think we can announce a capital alliance. And for the revised target towards achieving the midterm plan, we're making no changes, and we're trying to achieve towards the midterm plan. That is all. For the summary of the progress and the outlook. That is all from me. Thank you very much.